Welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Friday 19th of July. We've got a bit of a dollar rebound a little bit today, but that's in response to some significant selling pressure that we saw back through the dollar yesterday. Now, the main driver has been the fact that these Fed speakers have been talking throughout the week, and certainly they're leaning towards rate cuts, and that was pretty much confirmed yesterday by Fed's John Williams, who sits pretty much as a centrist on the committee, and he was suggesting that perhaps the Fed need to get ahead if the economy slows and inflation slows, then the Fed should need to be getting ahead of the curve, really, with preemptive moves. And that really did hit the dollar yesterday afternoon, and that really significantly impacted throughout markets. We saw a breakout on gold to multi-year highs, although that has unwound slightly today, back to 1439, which was the old resistance area. Big breakout to multi-year highs. We saw euro dollar rebounding sharply. We saw dollar yen sharply lower below 107.50. That's a key support area that is a key indication, I think, that the dollar is under pressure. Now, we have seen a little bit of an unwinding move to this dollar weakness today, with the dollar rebounding, but I think that ultimately it's not going to do too much to change what looks to be a really significant moment for the Fed in the July meeting, and a rate cut is of 25 basis points is absolutely nailed on. That's pretty much a certainty. It's just how the Fed now guides, and obviously with the comments of Williams, who was pretty much backed up by Vice Fed Chair Richard Crude as well. That has really set the ball rolling on the potential for a 50 basis point rate cut. So there has been a significant shift, and you've seen Treasury yields falling away again, certainly on the 2-year, and that yield curve continues to steepen back with the 2-10 spread higher, but also the 3-month 10-year spread at levels not seen since May, with actually now positive on that 3-month 10-year spread. So that is a yield curve steepener. We saw the rebound on equity markets. S&P 500 certainly likes a dovish Fed, especially if the Fed is trying to get ahead of the curve rather than being reactive to really negative data points. And certainly that has been affected through equity markets today, with futures on the US continuing higher, but also European and Asian markets stronger. Nikkei 2% higher, DAX 0.9%, and FTSE 0.6% higher. So strong moves there seen on these markets. Oil is another interesting mover. It's been been selling quite sharply lower. It actually broke below the key reaction low of $56 area from the old July low yesterday. Rebounded a bit today on the news of a bit of a skirmish and in the Persian Gulf, where the US warship downed a supposedly Iranian drone, and that has allowed oil price to rebound, but just losing a little bit of that traction, interestingly enough, today. So looking ahead today, we've got more Fed speakers. James Bullard at basically at 4 o'clock. He's basically the most dovish member on the FOMC, so no expectations that he's going to move the markets. But Eric Rosengren, another centrist on the committee, actually leans a slight amount hawkish, so how he comes across today could again sort of feed into this whole mood that John Williams has set up. Now, we've also got the Michigan sentiment at 3 o'clock. Michigan sentiment is expected to improve a slight amount to 98.5, and that gives a sense of how the consumer is sitting in the States. Right, so my chart today is Brent Crude. Now, as I said, Brent Crude oil made a big breakdown yesterday, and you can see that on the Brent Crude chart, closing below that earlier July low at $62.10, closing decisively below that. Rebound today, but having decisively broken down below the old uptrend channel. MACD lines have crossed lower, stochastics are moving lower, and it certainly looks as though that in near-term rallies are a chance to sell. Now, I've talked about the 38.2% fib level. on the morning report, 38.2% fib, is a pivot point, and that is $64. So that is overhead resistance. We've seen the market rebounding to 63.30 today and rolling over. It certainly looks as though rallies are a chance to sell now on Brent Crude, trading underneath all the moving averages. As I said, closing below that July low really does reopen the June lows again, and those June lows come around the 23.6% fib level, around $58, just a shade above that. 59.45, 59.60 area. Looks like it's on course for a bit of a test in the coming days now. We've got the technicals in deterioration, and it certainly looks as though rallies are a chance to sell on Brent Crude. You can see that through the hourly chart, where you've got this run of lower highs, lower lows. You've got negative configuration on the hourly chart, momentum, and this rebound just looks like a sell into strength. I'll put the crosshair here. You can see old support becomes new resistance, and that is around 63.25, 63.30 this morning, as the market has subsequently fallen away. So I wish you good luck in your trading today, and I will speak to you later. Please click here to subscribe to my videos on YouTube, but also you can go to our website where you can sign up to our trading webinars.